Good evening, everyone. It's James coming to you from Dividend Stock Talk, where we talk about dividend stocks and what's going on in the world. Let's start this again. See what we're doing here. Jolly good. All right, we don't need this one open. Let's get out of there. As I was saying, it is 9:30, Thursday, July 6th, 2017. It's almost 9:31. Anyway, here we are at Dividend Stock Talk, where we talk about investing in dividend stocks for weekly and monthly cash flow. So get one of the screens open right now. I really don't want to look at this one. This is not the one I want to look at. But considering it's open, we're going to go through it anyway, just to give you an idea of what's happening in one of our other trading accounts. I just love it when the computer does what it wants to do, because I really wasn't there at the moment. I was going from one place to another. All right, so let's get to it. Let's open up our trading platform and find out where we are. Now, we like to invest in dividend stocks specifically for weekly and monthly cash flow. And I hate it when this thing is slow, because I click on it and it's just taking its time to get into where it's got to go. All right, now, what are we looking at? Today is the 6th, which is Thursday. So we're basically looking at stocks 10 days in advance. Okay, so I want to look at stocks that are trading on the 20th of July. Okay, so let's clear this first. Come on. Clear the filter and we'll find out who we got doing what. Alright, so Monday the 17th, which is right here. So we're looking at the week of 17th, 18th, 19th, 20th, and the 21st. With these guys right here. Let's bring this up. Now, we went over some of these yesterday and the day before. Clorox, Oracle, VSEC, West, I don't even know who these people are. West Pharmaceutical. Okay, so you get these 6 companies for Monday on the 17th. On the 18th, we have 8 companies: Caterpillar, Coty, HCAP, Horizon, Main Street Financial, I believe that one is. All these guys are, look at here, 2-cent dividend. Some of you guys might be okay with a 2-cent dividend. Me, I don't want to waste my time on anything less than 10 cents. Here I at PFLT, I don't know, 9.5. It would depend on what the software says, what the stock charts say, what the trends are, and a whole bunch of other things if I would chase something like that. But I usually don't. All right, Wednesday the 19th, 9 companies. Check that out. All right, Thursday the 20th, we got 4 companies: CVS, CMRE, BCR, ACSF. And then Friday we only have 1, PBA. Okay. Now, those companies are all the companies that are offering dividends on that particular week. Now, the reason why we like to look 10 days ahead of time, because we want to give the stock some time to move. Now, a lot of investors jump in just before the dividend comes up so that they can collect the dividend. Some people like collecting dividends. There's a strategy called dividend capturing. The way that works is you buy the stock before the EX date. You hold on to it after the date of record, which is usually about 2 days, because you have to go through what's called the settlement period. Okay, so to be the registered owner of a stock, you have to own it for a minimum of 2 days. That is why they have what's called the date of record. So if you want to collect the dividend, you have to be the registered owner of the stock. In order to do that, you have to do it 2 days prior to the date of record, which is usually the EX date or the EX dividend date, or whatever you want to call the date. The EX dividend date. It's the last day the stock trades before the dividend is paid out. To collect it, you have to own it before, hold it, sell it after the date of record. Does it work with all stocks? No, it doesn't work with all stocks. But we've created some software that goes into the data stream. The data stream is where they take all the information, today's data, yesterday's data, the day before, the day before, the day before, so on and so forth. What kind of data do they collect? They collect the opening price, the high of the day, the low of the day, the amount of volume being traded, and of course the close of the day, where the stock closed at. There's probably some other data that they collect also, but those are the main things that we're interested in. We're interested in what the stock opened at, what the high of the day was, what the low of the day was, and how much volume was there. Okay, and of course what the stock closed at. So the software goes into the data stream, takes all this information, does a lot of interesting mathematics. They call it algorithms. It's just an interesting fancy word for arithmetic. 1 + 1 = 2, 2 + 2 = 3, so on and so forth, on and on and on. So fancy math gives us the answers that we're looking for. What I like to call it is probability trading. Okay? Now, is it guaranteed? No, of course not. Just because a certain stock does a certain thing every year, I'll give you for instance, Disney, DIS, has a tendency to move up every year just before the dividend date. Why? I don't know. I don't care. All I know is it moves. I want to take advantage of it. I want to collect a dividend, or I want to collect an option premium, or I want to collect a stock movement. If the stock moves a certain time, I want to get a profit. I want to get in, get out, take my money. Thank you very much. Move on to the next company. Why? Because there's over 3,500 companies this year alone paying out positive dividends to their investors. Now, I can't invest in all of them, so the software tells me which ones I can do today, tomorrow, the next day, depending on where my money is and how I'm positioned. Okay? So, that all being said, let's take a look at a couple of examples. Today being the 6th, we're going to take a look at some stocks that paid a dividend today, was the X day today. So if you wanted to collect a dividend on one of these companies, you would had to have bought it yesterday or the day before. Hey, talking about Disney, there it is right there. Now, interesting thing is we like to trade 10 days in advance. So if we wanted to trade any of these stocks, we would have had to bought it 10 days prior to today. So what date is that specifically? Okay, so 5 days ago, 5 trading days ago, was the 29th. See that? Right here. Okay, last week, last Thursday. Let's go back into the month of July. Month of June, sorry. Alright, so that would be 5 days here. This would be 10, and we wanted to get the day before, which would be the 21st. That is the key date we're going to look at. Now, I haven't seen any of these charts, so we're going to go through them together. We're just going to go through a few. We're not going to go through every single one because that's just crazy. I'm going to go through some of the big names. Here we go. AT&T, Verizon, or is that Visa? VZ? Whoops. Yeah, Verizon. Toronto Dominion Bank? No. AT&T Corporation. WGL Holdings. Alright, so we're going to take a look at some of them. And the date we're going to be looking for is the 21st of June. Okay? So, with that being said, let's quickly look at AT&T. Now, 21st, remember. Now, they have a 49-cent dividend. And the 21st is right here. Wow, see, I told you it doesn't always work. So let's quickly take a look and see, had we bought AT&T at the opening on the 21st, where would we be? Okay, this is the EX date here, so we wanted to be out on this date right here. Okay, the opening for this date was, okay, here's the opening price, here's the high, here's the low, and there's the close. Okay, so the opening on the 21st was 38 38.64. The high of the day was 38.67. So basically, had we bought AT&T and wanted to collect on the dividend, we would either be still holding it or we would have taken a loss. See, told you it doesn't work all the time. Let's quickly look at Disney, DIS. Where's Disney? Right here. And they got a 78-cent dividend. Looking for the 21st. 16th, 20th, 21st. It's right there. All right. Do we even need to really go through this exercise? Okay. All right. She opened up at 104.39. 78 cents on top of 104.39. Now I got to do the math in my head. Damn it, 105.17. All right, so it didn't make it the first day, didn't make it the second day, third day, but look at this. High was 105.85, so you're out within the fourth day. 4 days, you get your profit, and then you're out. Or, if you want to do what is called a trailing stop, you could have got up all the way to a high of 108.62. That's a nice move. Okay. Let's take a look at another one. APOG. APOG. Remember, we're looking at the 21st. 21st. Okay, so the 21st she opens up at 56.17. Oh, it was APOG. Okay. Apogee Enterprises, a 14-cent dividend. She opens up on the 21st. Remember, I told you, 10 days prior to the EX8. 10 days from yesterday, which would have been the 21st, like we went through that exercise. Okay, the 21st, she opens up at 56.17. The high of the day was 50. Right here, see? 50, the opening and the high. Okay, here is the 21st. 56.17 was the opening, and the high of the day was 58.68. That's almost $2 and something cent move on the first day. So you were in and out on the first day. Now this, I'm just quickly going through these. I'm not going to go through everything we do to take a look at. I'll do that later. But at the moment, I just want to show you, had you done this 10 days ago, what you would have got. Now we've seen two of them. We've seen AT&T, which was a bust, which we'd still be holding, but it's AT&T. It's been around for over 100 years. Disney, you went out in 3 or 4 days. APOG, you're out in 1 day. Okay, 25-cent dividend for Banner Corporation. Let's take a look at Banner. B-A-N-R. Okay, squeeze it down to the 21st. All right. Here's the 21st right there. Okay. Now, BANR is offering 25 cents. She opened up at 55.76. Okay, first day she gets 55.86, which is 10 cents to the upside. Now, we only want 25 cents, which would be 56.01. Okay, she doesn't hit first, second, third, fourth, fifth day, sixth day, nope, seventh day. She opens up at 57.47. So the seventh day, you're out. Nice little profit. Okay, you had the trailing stop, you'd be out right here. But I don't want to get into the trailing stop because that does nothing more than confuse people. So let's just look at the move that it makes. We're looking for the 25 cents. Yeah, it made it. 7 days. Okay, the next company, BRC. BRC. We get the 21st. And BRC, we're looking for 20 cents. Okay, Brady Corporation, never heard of them. All right, 20 cents. Now, here's an interesting one. She opens up at 35, and she hits a high of the day at 35.20. Okay, so I can't tell you that if you put an order in the night before, you would have been filled at 35? I can't tell you that because I don't know. It doesn't always work that way. Just because that was the opening of the day doesn't mean that's the price you're going to get it. Okay, and the high of the day was 35.20. So let's say hypothetically you bought it at 35, and you had a sell order for 35.20. Just because you had a sell order for 35.20 and it hits 35.20, it doesn't mean you're going to be filled. It means it just hit that high. It could have hit that high for a fraction of a second. One trade goes off, not yours. So there's a possibility. It could have been yours. It might not have been yours. I don't know. So BRC, would we have gotten it? I don't know. Let's take a deeper look into it. Oops, let's go back. Okay, so look where BRC is. She starts out the year at 29.49. Okay, it takes a couple of weeks to jump into a trading range of 32. She goes sideways for about a little over a month, and then she jumps up to another trading range of 34. She trades there for almost 2 months, drops back down to 32, and then shoots on up to the 37 area. And she trades between, was that 38 and 35 and 38 for quite a while. And then at the end of May, she's nothing but decline. Look at this. So would we have gotten into this on the 21st? I honestly couldn't tell you. Look at the volume. The volume. There's no real. What's the good word I'm looking for here? Average, because it seems to be all over the place. I mean, between here and here. But look at this. Got a big spike here, and the volume like drops off the next day. You know, huge double or triple volume. Then it's like hardly any volume at all. The blue lines in the back you're looking at, not. Okay, but look at all the down days. Down. Okay, so just because the software says the dividend's coming up and they're going to hit their target, just because everything is pointing in one direction, if the trend, now the trend is, what direction is the stock moving? The stock is moving in a downward direction. I mean, anyone can see that. You can bring it to a second grade classroom or a third grade classroom and say, hey, what direction is that stock moving? Down? I mean, come on, look at it. And that's not even, 2, 3, 4, 5 days. That's, what date is this? May 8th to July 6th. Nothing but that. You can't count July 6th. July 6th was an up day. Okay? But not really. Because, okay. BRC closed yesterday at 33.35. Okay? Today, she opens at 32.95. This is a big drop. So yeah, I mean, from here to here, she's at 33.35, and she opens up at 32.95. Okay, of course she's going to go up because that's a huge gap down from here to there. Why did it gap down? I don't know. Don't really care, but it did. But all these down days in a row, I probably wouldn't have. I probably wouldn't have gotten into it, because they say the trend is your friend right up to the end. And this, she goes sideways here for about a week and a half, and then it's nothing but 1, 2, 3, 4, 5. Doji, you're going to count that in. 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17. It's like 80% down days. And okay, so anyway, I probably wouldn't have done that way. Let's look at DGX real quick. DGX, Quest Diagnostics Corporation, 45-cent dividend. DGX. Hey, anyone can see that thing's going up. So let's take a look at the 21st. Okay, the 21st. Here we go. 45-cent dividend. She opens up at 108.33. She hits a high of 109.09. It would have been out in the very same day. Okay, you want to do double dividends? You'd be out a little bit longer, 3 or 4 days. Disney, we already looked at. DRI, what is that? DRI, Darden Restaurants. Never heard of them. However, they're offering a 63-cent dividend. DRI. Another one. Look at this. She starts the year off at 62. 1, 2, 3.5 months going sideways at that tight area. Look, 60, 62. She stays in that channel. That's what you call, that is a classic channel. Look, from there to there. All right, so the end of the channel, which is right around, I've been talking about this for quite a while, actually, since the beginning of the year. Now we're into July. You're going to see a few key dates. One of them, 08, where everything just about tanked in 08. That is a key transition date where everything moves in one direction. Now, you're going to find very common that the election date, when Donald Trump got elected in November 8th, stocks have a tendency to go up or down. I haven't seen one yet that went sideways through that whole transition. Look at this right here. Okay, 11/8. This thing's at 64. Trump gets elected. She jumps up to 75. That's a $10, $11 move within less than a week. What constitutes that? I don't know. So what happens? She moved up to 75. She trades 75 for 1, 2, 3, 4 months. And then right at the end of March, she goes from 76 all the way up to 91, where she'd been going sideways for a couple of weeks. So that's where we are. So let's look at DRI, 63 cents on the 21st. 21st, here we go. Okay, 21st. She opens up at 88.77. Okay, we're only looking for 63 cents. So 88.77, she jumps to 89.90, 89.32 on the first day. Okay, it may not have made the whole 63-cent move. However, you definitely would have been out on the second day. Okay, and look at this. 1, 2, 3 days later, look at the high it hit there. 95. Are you going to get that? I can't say that. I can't say whether you are or you're not. I mean, the plan is, it's a plan. You stick to the plan, and there are going to be anomalies. This is an anomaly right there. That's something you don't expect, but hey, it happened. You get in at the opening of the day. The opening of the day was 88.77. You're only looking for a 63-cent movement. Collect the dividend or collect the movement, one or the other. It's up to you. You know, just because these stocks have a tendency to do this doesn't mean they're always going to, but some of them did. A large percent of them did. Actually, every single one we saw so far, but one made the move. The other one, BRC, we said we weren't quite sure whether we would do that one because of the trend that was. And this one has a nice little trend because this one is basically moving upwards. It's a nice move. Now, see that? Nice movement. 21, you're way down here. Now, you're not at the high of the year, and you're not at the low of the year. The high's right here, and you're down here on the 21st, and you got 10 days to the dividend. So why not jump in? Jump in, okay, and you're out within 2 or 3 days. Nice little profit. Okay. Do I really need to see the rest of the First of Long Island Corporation? FLIC. Now that is a weird. I wonder what they do. The First of Long Island Corporation. That's an interesting name for a company. The First of Long Island Corporation. Don't know. Shall we take a look? Why not? A time to kill. FLIC. FLIC. Okay, interesting. She starts out the year at 19, goes sideways for a little bit. That's about a month, then she jumps up. 1, 2.5 months in the 21 area, and right here, right around election time, 11/9, she goes from 21 up to 28, 27, 28 in that area. It's a nice little move. And she's been trading sideways from December all the way to where we are now. Okay, so did we want to get in on the 21st? Okay, FLIC, so I'm looking for 14 cents. She starts off the day, opened at 27.55. The high of the day was 27.75, which is only a 20-cent move. So, you're out in the first day. Interesting. All right, I'm not going to go through more here. The 4th, everything was off. Ah, look at that, MasterCard. GD, what is that, General Dynamics? Yeah. Costco. American Express. Okay, so anyway, that's neither here nor there. More companies to take a look at: American Express, AMX. AMX is looking for 32 cents on the 21st. 21st, here you go. She opens at 15.80. That's not right. That's AMX. Looking at AXP. Sorry, that AXP. Wow, imagine that. Okay, here you go, 21st. She opens at 82.60. She hits a high of 82.80. Didn't make the 32 cents that we're looking for on the first day, second day, third day, but did make it on the 4th day. 4th day, you'd be out. All right, so we're done and over with this. I'm tired of going through this. For those of you who have never seen it before, that's what that exercise was for. Get all these companies. We cut and paste right here. Take the list. And then we click on here, and it says export file. It allows me to take all of these, export them into what do you call it, Windows Office or something, or whatever you want to use, and throw it into a spreadsheet, cut and paste, and put them into the software. And the software does all the crap. And what used to take me hours, I can now get done in just a few minutes. Anyway, that's who's trading. That's where we are. So let's take a look at, excuse me, I yawned. Let's take a look at where we are right now. ABBV, we got into that one. We're looking at the 71.5 and 72 calls. So let's look at ABBV. We bought this last week. Nice movement up. Now she's moving sideways, and we have a lot of down days in this past couple weeks. I mean, I bought it last week, the last month of the last week of June, and I've held it right through the first 2 weeks of. We're in the first. We're in the second. Well, we're in the first week of July. All right. We got the 71.50 and the 72 call. So in order for us to be profitable on this thing, I mean, to make money and just walk away, the thing has to close above 72. All right, we were in a good position this morning. She opened up at 72.24, and then she had a high of 72.45. However, she closed at 71.73. So we're gonna have to keep a close eye on this one for tomorrow, because we want it to close above 72. That way we can make that 40 or 50% profit on that position. We got 50 contracts on ABV Inc. AbbVie. I don't even know what they do. That's interesting. Okay, so AbbVie Inc. We have to keep an eye on it tomorrow. So if you're going to stay tuned tomorrow at 3:30, just before the market closes, we'd like to get in and take a look at what's going on. And we usually do that live on scene. So no matter where I am, I take my computer with me, I log on, and we do it live. I think last week we were in the parking lot at Lowe's. Who knows where we're going to be tomorrow at 3:30. All right, so ABBV closed down from what we wanted to do, so we have to keep an eye on that one. Let's take a look at Colgate-Palmolive. Now, Colgate-Palmolive, we did a spread on it last week. I think we did like 8 or 9 spreads last week, and all but 2 were profitable. Okay, CL is a dividend king. They've been increasing their dividends for over 50 years. They're basically one of those no-brainer trades. They come up, boom, we jump in on them. Now, when we first did this 2 weeks ago, I said we have 3 weeks to trade Colgate-Palmolive. Last week we did a spread, which we would have caught, I think it was a 45 or 50% return. However, we missed it, but we were allowed to buy the stock at 74, which was lower than what it closed at last week. So we kind of made money on that up until the point where, you guessed it, Colgate-Palmolive decided to close below 74. Okay, so as you can see, CL is all over the place. She starts out the year, the 73, 74 area, trades for a couple of months there, drops down to 72 area, trades there for a couple of months. Then she drops down to the 66 area, trades for 1, 2, 3, 4 months in that area, while hitting a low of 63. The middle of February, she jumps back up to the 73 area, trades 1, 2, 2.5 months, drops down to 71 for a month, and then back up to where we are today in this area. Now, I don't like seeing a lot of red on the tail end. Now, see, I bought this a couple of weeks ago over here, where it looked good. All of a sudden, you got 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11 down days and only 1 up day. Oh, that's a 10-to-1 ratio. Talk about getting burned. Not really burned, but it is Colgate-Palmolive. And not this Friday, which is tomorrow. But the next Friday, they're paying their dividend. So I want to be out of this one by next Friday. So I'm hoping this thing goes above 45. Oh, sorry. Above 74 by the close of tomorrow. So if she closes above 74 tomorrow, we'll be out of that position, and we'll make, I think, like $2,600. 24, 26. I don't know. I think it's 24. $2,400 for Colgate-Palmolive because we sold 50 contracts for someone to buy it from us at 74. Guess what? We bought it at 74, and someone's going to buy it from us at 74. What's the point? Well, it's called a covered call. I buy it at 74, someone buys it from me at 74, and for the privilege of doing that, they pay me 65 cents per share. 65 cents per share at 5,000 shares is $2,600. Well, somewhere around there. So just for buying that and then selling it in the same week, because I bought it on Saturday at 74, Monday came and I sold it at 65 cents. So hopefully tomorrow it closes above 74. If it doesn't, I still get to keep that $2,600. Okay? Now, if she doesn't close above 74, guess what we're going to do? We're going to end up owning those shares for next week. And what can we do next week? We can do the exact same thing. We can sell CL. Okay. We can sell the 74s next week for 45 cents a share, which is a little bit under $2,000, but it's still another $2,000. So you put up all the money, and this week we got $2,600. Next week, if it continues to stay where it is, below 74, then we can turn around and resell the 74 weekly call for another covered call position, which is, like I said, just a little bit under $2,000 for next week. All right. That was Colgate-Palmolive. Going to keep an eye on that one. I believe the last one we're going to take a look at is Yum Brand. Now, Yum Brands, they used to be a dividend king. Explain this one to me if you can. You work diligently, extremely diligently, and you coordinate everyone you have at your disposal You're the CEO of Yum. And you have everybody at your disposal to continue working a positive force, and you increase your payments to your investors. Your dividend payment every year increases for 50 years. In order to be a dividend king, you have to have 50 years minimum of increased dividend payments to your investors. And Yum Brands actually did that. And then all of a sudden, for whatever reason, the CEO or the board of directors decided to stop increasing the dividend payment. So now they are no longer a dividend king, but they're still up there. So let's quickly take a look at where Yum is. Okay, so Yum starts out the year at the low of $59.91. Took us about a week or so to jump into that trading range of 62 to 65, and she trades there for, let's say, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 months. 10 months in this little trading range. Okay, she had one little what do you call that, jump up and one little drop down, but basically in the trading range. Okay, so the last couple of months she's jumped up to the 73, 74 area, where she's been going sideways. Now for the past 2 weeks, I bought this like 2 weeks ago, get 1, 2, 3, 4, 5, 6, 7, 8 down days and 1 up day. Okay, it doesn't make me happy camper, but let's see where we are. Okay, so Yum was another one. We ended up buying it at $73.50 last week. Now we made a little bit off of it. Wait a second. We able to buy it for less than what it was trading for, which is one of the privileges of doing one of those trades. Okay, so come Monday morning, we find out we have 5,000 shares at $73.50. We sold 50 contracts at 44 cents each. We bring in roughly around $2,200. Okay, so $2,200, 5,000 shares. As long as this stock stays above $73.50, we'll be good to go. However, what did she do? She dropped below $72.65. That's what she closed at today. So for us to get out of this position tomorrow, this thing has to stay above $73.50, I believe. Yep, $73.50 right there. See it? $73.50. If not, we go in and let's see what the $73.50 looks like on Yum Brand for next week. $73.50, 22 cents. So $1,100. You never know. Now, I can't really tell you this is what it is because several reasons. Number one, as you can see, the bid and the ask are way off key or way skewed. It's 22 to sell and 47 to buy. That's a big spread. Why is that? Because it's after hours. During hours, these spreads get a lot closer. You know, it might be 30, 32, 35, 37, you know, but it's a lot closer during trading hours. And we have 8 days, which we're going to lose 3, Friday, Saturday, Sunday, and then we'll be at Monday. We'll have 5 days. So these numbers are going to change come Monday. Okay, so depending on where the stock closes tomorrow, and then Monday where it opens, will give us a better idea of what it's going to be like if this thing stays below $73.50, which I am not 100% happy with where it is or where it looks like. But let's quickly take a look at seasonality and see what that says. Okay, this is where the stock is doing. Moving up nicely, just like it right here. Sideways, moves up. Right, sideways, moves up. Okay, and here's where we are. Okay, as you can see, crosshairs right there. Tomorrow could be the same or go up. Don't know. But next week goes up a little bit. So that's where we are. Now I'm going to check for questions. If we have no questions, I'm going to be out of here. Get me some rest because tomorrow should be a fun day. You never know. No questions. Woohoo! All right. So anyway, this is James from Dividend Stock Talk. I just want to tell you guys that, hey, it's been fun, it's been real. So let's take a look tomorrow. Keep our eyes open for ABBV. See, actually, all three of them. Yeah, all three we have to keep an eye on. All right, so let's catch you guys tomorrow at 3:30. This is James signing out of Dividend Stock Talk.